following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
On it. Sorry, guys. Apologize. We got the voice now. Sorry about that. So we're going to have Mustafa on as soon as we can from Riyadh. And I know we had a couple of things going on with the oil today that I was talking about before I realized I was on mute. And one of the things with the Iranians and the Saudi Arabians, good gracious. Now my Yahoo is blown up. Daggone it. Bad morning, guys. One of the things with the Saudi Arabians and the Iranians, you guys have probably read about this already. Can't come to a deal. Oil market feels like now there's going to be a glut of supply again. The Kuwaitis are, on strike, supposedly. So there's a little bit of a mixed bag there. But the bottom line is, oil's come off. We talked about not getting married to another breakout above 41, 31, 41 and a half. I hope you guys had a great weekend. Missed my opening speech about that. And actually, I told you we had a new player in the game here, the shark, the bear, and the bull now. We're going to discuss that later. As we look at the weekly on oil, one of the things that we have talked about, again, is not getting married to this 41 and a half area as it was an impending breakout. Just kind of wait and see here. Now, with the news out, the fundamental news out, the inflection points you've got to pay attention to now, 39.65. That's our daily unfair high. And what has happened this, Sunday night, Monday morning, we've opened, we've gone and retested that. 39.55 was a high, 39.65 is the top of the box. So we could easily revisit the entire fair auction down to this 36.22, 36.58. Let's pull up the scanner really quick. And let me show you these numbers as they appear in the scanner. And I want to remind everybody on the 20th, we're going to do a webinar with TFNN. Sign up if you can. All existing subscribers, any new subscribers. We're going to go over some strategies that are, let me get this up here so you can see it. We're going to go over some strategies that are rooted in finding opportunities in the scanner. Here's the futures section. Here's the WTI crude. There's that number, 36.22, and there's that 36.58. So what I want to do here is just go into my landscape view. See these two numbers down here? The outside standard deviations away from the mean on these profiles. Remember, the mode are these POCs, and a wide profile you're going to have to pay attention to those severely. But this little DMZ down here is what I think the targets probably ultimately will be. That's where you're going to look to kind of pick a battle right now. And you've also got now an intermediate lid, in my opinion, that you can sell around 39.65. So you've got about a $3 a barrel kind of range here now. I don't think personally we're going to go back and revisit 41, 31, 41 and a half anytime soon. So those are the big numbers. Kind of let the market come to you. If you're just waking up, and you know, you're not in the oil market, which I was hoping that you guys would pass on rolling the dice beforehand. You know, those are the kind of let the market come to you inflection points. So that being said, we're going to take a look around at a couple of indices. And first of all, we're going to take a look at the. Let me go back to a currency that's been an interesting situation that is not totally related to this, but we're going to look at a couple of currencies that actually are related to this. And let me repost my chart here just to make sure you see this. There's the Aussie dollar. Looks like it's getting ready to explode again. Japanese yen. This is, again, you know, why we let the market come to us. This is another one where, you know, the trend is down. I don't care what the fundamental news is coming out of the BOJ. We came up to this 109.61. We hit it. We hit a high of 109.673. So it got in the neighborhood with a little noise factor. Now we're coming down. We're hitting the bottom of the profile. And what do you do now? In my opinion, you got to be able to, you know, this was a decent little trade we talked about, you know, whatever, 150 pips pretty quickly in 2 days. But you got to look at the long term. I got a couple emails about this. That's why I wanted to get it out. The long term weekly, we talked about this. We talked about the long term targets down below and being able to sell resistance in that, you know, still kind of move down, in our opinion, or in my opinion. This 105, 106, 105 and a half, 106 general area down here is where I think this ultimately is going to hit. So now, you know, if you caught some of this resistance at 109.61, you want to be taking some weight off here at the bottom of the profile. It's a relatively thin profile. That's good news too, in the grand scheme of things. And you could wait for a daily close and then be able to sell again, maybe put the position back on around 108.13. So that's kind of the way I'm looking at the end. So now let's go back into the futures screen. Let's take a look at the Shanghai really quick. Okay, so we talked about the Shanghai showing some strength, showing the ability, crowding. This is still not enough of a move down for me to get out of the frame of mind that we're just kind of getting pent up on the launching pad here. So keep your eye on that. Those two inflection points, 30.56, 30.62, we're just barely below there right now. And any breakouts above there, I think, actually have to be bought. S&Ps, we're going to briefly touch on this and come back to it. We're going to actually look at the scanner, take a look at our global indices heat grid. When we come back, talk about that a little bit, then drill down into the charts. We'll be right back, guys.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Remember, when we're looking at these heat grids, we're looking at breadth calculations based on, the internals of a lot of these global indices. And, what this does, it doesn't incorporate the futures immediately. But if there is a future component to some of these indices, like the Nikkei, for instance, this particular cell structure that you're seeing here is based around the futures. So what we're doing is we're giving you the price of the index, the real time as best as possible via the futures. And we're showing you where those futures are relative to the profiles of those futures. But we're also giving you the internals here. So, you can get a chart, Nikkei 225. I'm just going to pull this up really quick. This is what's going on right now, currently, with the Nikkei 225, the futures. As well as I can pull up the S&Ps here with the chart. Here's the 1 hour, what's going on with the futures, and showing those cell structures across the board. Here's the landscape view of those futures. And as you can see, we're coming back down into the top of the profile, 2065. That's why we're showing top there. This gives you a ton of information, in my opinion, and you're able to access, what's going on across the globe quickly. In Bloomberg, you can go into, I've got a terminal right here. If I go into Bloomberg even, there's 138,000 functions on this machine, and you've got to peck away to actually consolidate in your mind all this information, possibly even write it down. Even if you go to Bloomberg app on the internet, you just get prices. This thing gives you a lot. I'm trying to be a sales guy today, by the way. This thing gives you a lot of information at one glance. And I like to see, things that are turning relative to the internals. That's why this was created. But, again, you've got quite a bit of extra information now on top of the internals. Let me beat that to death. All right. So as we look at this, we're going to drill into the S&Ps. Here's our current cell structure, but I'm going to go into E-signal really quick. And we're going to just focus on the S&Ps for a bit. So we're trading 2066 in that general area. We've come down into top of the profile, pierced it a little bit, reached a low today, last night of 2058.50. So what do you do with these things now? I think, we don't have a terribly bad reaction to the oil situation. Again, the market's been going up on the hopes that oil's going up, oil might pop, lower rates, blah, blah, blah. In my opinion, you would have had a more violent reaction to this if this was a market that wants to come off where it's recently been. So I'm a little, confused here. So what I want to do is I want to drill down into separate sectors and try to find opportunities. So what I want to do is go into the scanner. I want to go to the ETF section if we're just going to kind of think about the S&Ps and what that general concept means, that I don't feel comfortable and I'm a little confused on where this thing's going to bounce around and is it going to make new highs. I don't think we're going to pierce new highs today, but again, the market's not gapping down significantly. What I want to do is I want to look at some of the sectors in here. I want to visit rates really quick. I want to go back to the 10-year before I do this, just to kind of get a glance of what's going on here on the 10-year, which seems to never go down. We've talked about this. This is without question been the easier trade to try to buy support. That recent support on the 10-year, 130.07. And what do you do with this now? And let me check something really, really quick here. Okay, so what do you do with the 10-year now, and how does that affect what we're getting ready to get into with some of the sector analysis? The 10-year, again, I think that the trade here is to really think about, all right, on a relative strength standpoint, this has been buy the dip, buy the dip, buy the dip, and I still think that's the case. So where's the dip at this stage? You've got decent support at 130.07 into 110. That's based around the daily unfurlows, which have already been used as support, in the 240 unfurlows right now. So, right now you don't have a lot of levers with this. Put a gun to my head, I'd rather just be kind of long this thing and continue to stay long up into 131.29. But that being said, rate structures possibly going sideways or up. I want to look at the utilities really quick. And got a little bit of a mixed bag between the weekly and daily. This is pulled back already. I don't have to tell you guys this. Let's look at the XLU chart on E-Signal. And let's take a look at this as we, talked about the possibility of this finding support around 48.47. I want to focus, talking about sectors, I want to really pile into this sector. And this is between the oil and the utilities. This is where I think the opportunities are. All right, so what are the opportunities in the XLE? I want to try to find, here's, we got a print this morning, 48.80. All right, so we're opening about the same area we closed on Friday. We used 48.44. Remember, big wide profile, got to pay attention to the POC. We might have rates edge higher. Thirst for yield, utilities. Market a little non-directional right now at the top here, I feel. So let's go into the scanner and let's try to find some long opportunities is what my idea is. So here's the utility sector. I'm just going to look across the board here, and we're going to look at PEG. That's one of them. Some of the stocks that acted kind of well. We're going to look at GAS. Let's look at PEG first. All right, so the XLU came off its support. PEG acted extremely well. We're going to have to take a look and see how this thing opens. It looks like, we haven't opened yet, had a really good close on Friday. 46.81 is to some degree resistance on this right now, but in my opinion, it's acting relatively strong. You've got to see where it opens. You've got to look at the XLU and kind of, if that thing starts caving in, all bets are off below 45 and a half, 45, 60, 69. You got to put stops in there, but I think we could easily reach past 46.81 on this and retest highs. Now, this is a stock that came off when the XLU came off. I'm going to pull up the XLU chart here. This was that weekly pullback that we had, a pretty big bar. We're going to talk about this a little bit more when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Even though we had all these yellow peelbacks on a lot of the greens in the XLU, we still have, and that's new inflection points that are going to be given this morning. eSignal kind of outputs those on new weekly bars on Monday, which is where we interactive data is eSignal, and I guess now they're owned by the ICE. Do they want to buy any more companies? I should call them today. Seems like they're just wanting to spend a lot of money. Couple other greens here of note we could pay attention to. Tico Energy, GAS. Let's take a look at those two. GAS. And we're looking at possible opportunities here on the XLU. So again, found support, really cool chart on the long term. This is GAS 64.97. Let's just call it 65 support on this. And I like the way this is crowding. I like the way that it's hovering above these weekly inflection points. I know you guys are thinking, wow, let me buy the high print. Thanks, Logan, for letting me know about this. But any breakouts above 65.58, I still think you got to buy them. Look at this thing relative to profiles. You know, it ain't too high and it ain't too low. You got to always remember that. And this thing could be breaking out again. Remember, it's already, Tom and I were talking about that. Sometimes it just does these explorations just to do them. New profile, did it, found support, crowding the unfair highs again, could get a pop. And Mustafa's Skyping me right now, Al, from Riyadh. Said he's driving. He's trying to get back before the end of the show. But if he doesn't come on today, we're going to definitely hit him tomorrow. He's a great guy, and he's right in the middle of all that over there. Would love to get some of his views and talk about some of the, different perspective without question. But he's probably going to break his neck trying to get home here. So that's the situation on GAS. Let's take a look at Tico Energy really quick. All right. Again, kind of like gas, trading above unfair highs, 27.54. That's where you can orient some stops. But this is kind of a cool situation. And this is what I would say on Tico. You've got a real thin profile here. All right. XLU could come down. There's no question about that. And Tico, this is our weekly chart, obviously came down and found support on a current profile when the XLU was just outputting a new profile. And it acted extremely well last week. You could place stops below this very thin profile all the way down below 27.29, just to give this thing chances to rattle around, still stay in the trade. It's got a decent risk reward. I love how this thing's acting. And I think we've got a caller right now, Charlie. Charlie, are you there?
I am here.
How are you?
Good morning. Doing great. It's a holiday in Massachusetts.
Great. I love holidays. I'm happy for you. Have you guys got
marathon? You've heard of the Boston Marathon, right?
Oh yeah.
Well,
oh yeah.
Today.
Oh my God, I forgot about that. That's awesome. How's the weather up there for that?
It's marvelous. It might, I don't know, it's supposed to get up to like 60, I believe. So it's going to be maybe a little warm for people that are exerting that type of energy and effort. But it's a wonderful day. Sun's out. Skies are pretty clear. No clouds. Just, yeah, it'll be good.
Okay, that's great.
Anyway, I'm in UGAZ. I got in the other day, and I held it over the weekend, not knowing what was going to happen to oil, but it just looks like there's no connection between oil and gas. So I was wondering what your take is on it. It's up pretty good in pre-market.
This is the natural gas 3 times long, right?
Yes.
Okay. Just to verify that. Let's take a look at natural gas. I mean, I don't know if you've been watching this show. I've just kind of been avoiding this. It's again, we talk about these trends, and they are what they are until they're broken. And this thing has just been really staying for the most part within profiles all the way down from the 4s, and it can go lower. I'm looking at the raw underlying contract right now. 2 is definitely that general neighborhood's the top of the profile here, but on the What was the symbol again? UGAZ?
UGAZ. Yep.
Okay. I don't trade this. Haven't traded it in years. But here's the daily situation. I just, I don't say, I hate to keep stuttering, but I just don't see a lot of opportunities trying to pick a bottom on this thing right now. I mean, it's kind of basing a little bit here, but it could throw up again. I just hate for you to be caught in something. I just think there's better long opportunities out there. I'm sorry to say that if you're loving to be long natural gas right now. I mean, it actually looks, just as sick as natural gas. It should, because
that's cool. I know, I understand. I can sell it. I would guess pretty quickly today because it's moving up a little bit. So it's probably just a bounce, and I'll get out and I'll make a little bit of a profit, which is good.
That's great if you've got something in it. The only way I'd really feel, a little bit more rosier about natural gas is if we could get above $2. I mean, and a lot of people go, wow, why don't you buy it now if you love it above $2? Because closes above $2. We haven't got a weekly close above $2, and that's what we've been talking about for the last couple of months. If we ever do talk about this product on the underlying, is just getting a weekly close above $2. We've kind of had a fake out a week or so ago, got up into 2.074, but we never have got a weekly close above, and that's going to put a stake in the ground, in my opinion, where you can then therefore start using 2 even to play defense around. And Charlie, that's just the way I look at things. How do I play defense first? And there's just no way to play defense on this right now. You got 1.796 down below on the underlying right now, but we're just kind of churning in the middle of a profile, and that close above 2 is just going to be super powerful.
Okay. All right. I appreciate your comments and your assistance there. Thanks.
Well, man, do you have any other questions?
No, this was the only one that it popped this morning, and I just wanted to get feedback, and you kind of confirmed my thought, and I'll take my few $100 and move on.
Well, I'm glad you got something out of it. Thanks for calling.
Okay, thanks.
Thanks,
Bye.
Charlie. Goodbye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We were looking at some of the stocks in the XLU. Had a caller. That was a great phone call. I don't trade natural gas. I stay away from it. It's just been in a death spiral, as you guys know. I can't bring myself to hit the buy button or the short button on that one. We're going to take a look right now. I'm going to go back into gold. Here's the situation on gold. We've, obviously looking very well, very supportive on the long term. Here's the inflection points to, excuse me, to play around with and pick battles. Closes above 1242, 1243, support around 1211. That's the unfair lows on the daily. So again, I think you don't sell this. This is something Joey and I were kind of focusing on the other day. Get these things out of the way here. Something Joey and I were focusing on the other day. Try not to get confused about what the actual position is supposed to be. So the long term, that we're still kind of in an edge up mode here on gold. And let's not get confused by getting short. So in that case, we're trying to block out the long side and just, this is kind of the regulator of that trade, the daily. We're trying to buy breakouts and buy support. Sometimes you get stopped out of things, but that's a probability game, and we're just trying to increase the odds, trying to figure out where the long-term trend should be, what side of the market you're supposed to be trading on, and block out the other side altogether. Okay. All right, I tell you what. I've got a chance to get Juan on from South America here, and I want to talk, if we can, before the show ends, since Mustafa is still driving in Riyadh in terrible traffic, he said. We're going to try to get him on and talk a little bit about how oil prices might be affecting some of the indices down in South America, namely the Bovespa. We're going to take a look at this one really quick. Here's the Bovespa futures. They've obviously been on a tear. This is the one we did, the coal cap out of Colombia, and the Bovespa. Did a Bloomberg article on this relative to what oil might be doing. This was a couple of months ago. I think this came out in February. But we talked about how the Bovespa and the coal cap will be completely enjoying this. So right now, the Bovespa is trading down 54,195. So again, let's just see if we can get Juan on to get a couple of discussions going with that before the show ends, and talk a little bit about commodities with him. We're going to cover a couple more currencies right now. We're going to look at the Canadian dollar. This is obviously one And let me see if I can get this server rebooted here. And let me get our screen back on it. Okay. So we talked about the Japanese yen earlier. We're going to talk about the Canadian dollar. We talked about taking off some weight around 108.13. We're bouncing off of that area right now. Reached a low of 107.84. So again, that's what these inflection points are for. Let's take a look at the Canadian dollar. Obviously not going to enjoy terribly lower oil prices. We're getting a little bit of a devaluation here. Remember, the Canadian dollar, as it goes down on this chart, is a valuation of the Canadian dollar relative to the US dollar. So again, oil going down and oil possibly seeing a top for a while could cause the Canadian dollar to rally here on this chart. If you're looking at the Canadian dollar futures, you're going to see a kind of an inverse deal here, but unfair lows are at 129.73.74. Getting a daily close above there. I'm not saying go long now, because all we did today was retrace back up into that area and come off. Getting a close above 129.73.74, that's going to allow possibly for an exploration in this fair auction, believe it or not, taking a look at oil at the same time for this thing to rally significantly and possibly explore up into 135.53. That's a long ways up there. That's 600 pips away from where we're at right now. But getting that close above is going to allow for that concept to be taken into consideration. Let's take a look at the euro. This is one I was not that correct on. We had a come off below the support areas. We were talking about 113.52. And that was a profile that was very, very significant from before. So we broke down below, got a new pretty wide profile this week already. That was that indication. We're within the profile. The profile is not in force below price action. So again, we're just going to now stay range bound within the profile. Unfair highs 114.64. And you got a relatively significant POC now at 111.43. So what do you do with the euro? It looks like it's broken down below that 113.52 like we talked about. We're rallying up into this unfair low on the daily 113.11.12. And as we look at this, do you trade this down all the way down into that POC now on the weekly profile at 111.43? To make an assessment of that, we're going to look at the dollar really quick. We're going to look at the dollar index. Got a new profile already attempting to appear down here on the dollar. We're in a downtrend. There's no question about it on the dollar. 94.93 top of the profile on the daily, 93.91 bottom of the profile on the daily. We could turn around here. I don't see a lot of direction on the dollar or the euro right now, so it might be two trades to just stay away from. And the reason I'm saying that is because we've also got a new profile attempting to appear on the weekly. So that means we're going to have a little bit of a support area here, but we're still within that daily profile also. So euro within a new weekly profile, everything's kind of range bound here. You can trade some of the inflection points in the scanner based on that concept alone. If I go into the Forex section and I look at the euro right here, you're going to just hit that. You're going to get the levels. We came off this 113.11.12 this morning. And those are the inflection points to pay attention to. You've also got the dollar in the future section. And there we go. New profile attempting to appear right there. I was showing you on the charts. You also got the Canadian dollar right there. And we're going to talk about that Canadian dollar just a little bit more when we come back, folks. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, guys, thanks. Welcome back to the show. Here we go. Canadian dollar. Taking a look at this one. Here's that, those weekly numbers we talked about, 129.73, 74. Just want to see that get a close above there. Let's take a look at something in the grain area. The train left. Let's take a look at November beans. God, man. John from Philadelphia, I hope you're retiring off of this trade. Getting above 915, using that support, head higher. Where does this thing stop? No new profiles here. The trend is your friend, and not a lot of reasons to take this off, believe it or not, at this stage. This thing can go higher. Here's the 240s. Man, this thing is looking tough here. Ooh, man. Great call on November beans there. And this is, this is what buying those strangles way outside these profiles. This is a good lesson on that one. If you want to start getting rid of the long side, that's up to you. But we had talked about that and maybe hanging on to the puts to see if it'll come back. But that's what they call a free trade when you do stuff like that. Okay. So we talked about gold. We've kind of been omitting silver a little bit. Silver's kind of interesting here. Finally, we got above a close above 1578. We could go back and retest that. Silver's looking a lot more sympathetic or empathetic towards the rally or possible impending rally in gold now. Now you've got kind of a stake in the ground. You can play defense on that. There's also that 1580 down below. So again, a retest of where we pretty much broke out before might be in order. Be prepared for that. But if we get a daily close above 1639.40, then you can use that as support for this to move higher. Right now, we've got middle of the range trade here on the daily. Not a lot of direction if you're day trading silver right now. Let's take a look at this discrete little stock called Apple. And we got to talk about this because we had a pretty ugly day on Friday. So we're trading 109 pre-market, and Apple had been, kind of marching forward above 104. We talked about 104 being that, area where you could probably start looking at this from the long side, considering that the market was looking a little bullish, breath staying positive. But now you've got that close that's happened below 110.73. We've already explored this entire fair auction before, so this kind of, doesn't really have to happen now. In my opinion, you kind of got to take a look to trade this right now on an intraday basis. In my opinion, you've got to take a look at the broad market situation. You got to have the S&Ps stay below 2065, 2066, and you've got to be able to look at playing the short side on Apple, any rallies up into 110.73 while keeping an eye on the breadth. All right, here's Apple. Here's that sell structure. Right now, we've gotten below profile, below the top of the box at 110.73 right there. That's your resistance area, in my opinion. And we're below profiles from the 240 and the 60. Guys, you've been great. Stay tuned for Larry, and hopefully we will have Mustafa tomorrow. He was stuck in a massive traffic jam in Riyadh today. Have a good one.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.